Well, thank you so much for being a part of our day and allowing us to be a part of yours. We always look forward to talking with you here on RFD TV and Rural Radio Channel 147 on Sirius XM, where it's a free listening period right now. So if you have a friend or relative that has a radio that's not activated, you can still get us on that radio today yet and find out what we're all about. All right, let's go and visit with Brian Hoops. He's the president of Midwest Market Solutions, and he joins us right now to talk about the markets. And Brian, we've seen a definite slide in the grain trade in the early going today. I know you've been watching it. What's going on from your perspective there?
Yeah, you know, it's a change in the weather and the perception from the trade as what we saw going into the long weekend. We come back here this week and drier weather forecasts, and it's really less threatening for the Central Plains and Eastern Corn Belt. The drier weather and the heat is what is badly needed for that corn market. We're seeing a setback there. Crop condition ratings come out for the first time this year, this afternoon, and those will be closely monitored by the trade. We really need to be above that 70% good to excellent. If we're not able to get above it, I think that's going to be a little bit of a concern for the trade. At this time of the year, if you don't have 70% good to excellent ratings, it's very hard to get trendline yields. Not impossible, but certainly very difficult.
All right, so you're located in southern Missouri or south central Missouri there. What are conditions like there? I know some of the guys have had to replant 2 or 3 times there.
Yeah, we've seen some wheat harvest been cut, and they're going to plant some soybeans in here. They haven't done that yet, but the wheat harvest has started. And with the warm temperatures, it's really speeding that harvest along, especially in Kansas, Oklahoma, down into Texas. We should make some pretty good progress on spring wheat, or in winter wheat harvest, excuse me. But in the spring wheat belt, forecaster for very dry temperature, very dry. Temperatures expect to be very warm, and that's not real conducive for that spring wheat crop, which is off to a kind of a slow start in here. It needs a little bit of moisture, maybe some cooler temperatures rather than the extreme heat. So it could be kind of a tiered market in here where traders want to buy spring Minneapolis wheat, sell the winter wheats as the harvest is ongoing.
Okay, let's take a look at the prices. And as you mentioned, the wheat harvest really putting some harvest pressure into the market right now. Let's go to the corn and soybeans, and then we'll walk through the wheat as well. July corn still down 7 1/4. We're at $3.67 per bushel right now. December down 7 at 3.85 1/2, both within a penny of their low of the day. If you look at soybean trade, we have July currently trading at 9.12 1/2. Wow, they're down 14 cents right now on that July contract. New crop November, well, it's down 9 1/2, trading at 9.19 3/4, within a penny of its low of the day as well. Now, moving on to that wheat trade that Brian was just talking about. We have July Chicago wheat feeling the pressure. We're down 9 3/4 at 4.28 1/2. And in Kansas City wheat, we have July now at 4.29 3/4. That's down 7 3/4 cents on the day, but it has lifted up off of its earlier low by about 3 cents now. So there's just a little bit of silver lining in there. We're still about 8 cents from our earlier overnight high. Meanwhile, on the Minneapolis spring wheat trade, we currently have July down 4 3/4 at 5.64. So you can tell it's faring better than the other 2 wheat exchanges. And if you look at the cotton market, here you have your July contract now 29 points higher at 77.38. And we have our new crop December contract at 72.41 per pound. That would be down 38 points. So widening out that spread once again today by about 65 or 67 points right now. We'll be back in just a moment. We'll check in again with Brian Hoops of Midwest Market Solutions, this time about our livestock trade. Kind of seen a gyration in the market going on over there too as we wrap up the month. We'll talk about it when we come back. Come on back. Let's resume our conversation here with Brian Hoops. He's the president of Midwest Market Solutions, and he's based in Springfield, Missouri. We talked about the grain trade and the pressure in the grains here in the early going today as we get toward the end of the month of May. Hard to believe we're that far into the year already here, Brian. Cattle market today, we had a very hard downturn last Friday on the cattle market. That's after the cattle on feed report came out. We had those feeders down over $4 on Friday afternoon, and yet we we have had a bit of a bounce here in just the last half hour to hour of trade. Right now, the feeders have the August up 45 at 147.40, so they've come up about $2.20 now off their earlier low this morning. And September had some follow-through selling early, but right now we're at 147.10. That's up 35 cents on the day, and now 147.32. So there you have it. We're over $2 higher than our low this morning. Now back on the live cattle side, we now have the June down a dime, but all the other contract months, the active months, we have August up 35, now at 119.30, and now you have your October 68 higher at 115.78. So a bit of a turnaround here, Brian, in this cattle futures trade, and it would almost seem to indicate that maybe they got all the bearishness out of the system after the numbers came out on Friday afternoon as the trade was going home.
Yeah, I think it's a great thing that we were able to trade on Friday when the report was released at 11. That allowed the trade to kind of position itself ahead of the weekend and react to the report. Of course, the placement levels were extremely bearish in the cattle, and we sunk sharply on Friday. We were able to see some follow-through selling early this morning and absorb that, and then we were able to rally back here into this mid-session, and so it's a very good thing we were able to trade on Friday. The key things that stand out is the big placement numbers. We've increased placements in 5 out of the last 6 reports and about 11% over last year during that time frame. So those are some pretty bearish numbers, and to offset that, we have to keep the cattle going through the market here very aggressively. Our weights do tend to rise in the month of June, but we're still nearly 30 pounds below year-ago levels, so I think that's a positive for this cattle market. Next week is first notice day for the June contract, and when February and April went into deliveries, that's when things got really exciting for those particular months. So I think next week could be a very exciting week for this cattle market.
Okay, if you look out beyond that, what are the traders going to be looking forward to then once you get past that first notice day?
Well, one thing definitely to keep an eye on is our marketing effort. It was good in this report that we saw on Friday. The cattle weights did increase from the previous week by 4 pounds, but they are still 29 pounds below year-ago levels. Now, typically we do rally in weights or increase during the month of June, and that is something to keep an eye on. If we stay current and we don't increase as much as what we normally do, or we can keep heavy discount to year-ago levels, that's going to be positive for this cattle market, and that's really the key thing to watch. Those weights come out every Thursday morning.
On the lean hog side, we had pretty strong closes on Friday. We had everything on the plus side. We had new contract highs, and now we're kind of falling apart here today on the lean hogs. I guess I shouldn't say falling apart, but we're maybe seeing some profit taking. Everything a little weaker. June down 87. The active July down 65 now at 81.25. So that's about 70 cents off our earlier high. Bit of a turnaround there. Are you very concerned about that or not, Brian?
Well, I think fundamentally this hog market still remains very strong. We took out the previous session highs around that 80.65 area. That was a key resistance on Friday, hit a lot of buy stops and rallied to new contract highs. So if we pull back to that same area, look for some more buying interest to come into this market. But we're getting close to the end of the month, and traders should be fat with profits in here from the long side. So there may be some more selling to come in tomorrow's trade, as it is the last trading day of the month.
All right, Brian, good to visit with you. Thank you so much. Appreciate it. Brian Hoops, president of Midwest Market Solutions, and he is based in Springfield, Missouri. So we look forward to talking with him each and every week. Good perspective on the markets.
Yeah, and we get to see him now. You know what I love about that? You can see that he's watching us in the corner of that shot. Thank you for watching. We appreciate that.